Nikkei are taking a very long-term view of this project and this investment. They see significant growth potential for the FT, particularly in Asia and the US. And I think if you look at the way they operate and if you look at their sort of shareholding structure, they take a very long-term view. And I think there's no point in their mind sort of buying the FT to sort of take cost out of it. They want to build the business and grow the revenues.
It was the price, and it was the right moment for Pearson to sell in terms of strategy, right? They've been leaving more and more newspapers and going more into education. So, and at the same time, they took the Financial Times from a traditional print newspaper into a more digital one. And after a few years investing heavily in online, now they felt that it was the right time. It was a bit of a surprise, like everybody, all news organizations were, reporting about Axel Springer being in the lead. And it was indeed in the lead until kind of like an hour before the announcement. So it was a very intriguing, very dramatic deal because it was quite competitive until the very end.
It's not a surprise here that this asset was for sale. We knew that. It's a bit of a surprise the price, which is I think it's a very good price for Pearson. And of course it does have further implications for Pearson, which itself is undergoing some pretty dramatic restructuring. But with that part of the cycle where companies clearly feel confident about doing M&A. And if you're doing M&A now in the cycle, either you believe there is a strong long-term rationale for such M&A, or you believe there is a short-term payback of which you have visibility. And you need generally both of those two to align to have the surge in M&A which we are seeing now, which should of course be good for capital markets.